Welcome, everybody. I am Camille Sargi, your host of Just 2 Minutes. And today I have Alex here. Alex, you want to tell us about you?
So my name is Alex Wallace. I work at Cornerstone Commercial Capital. I am the vice president. The company was started by my father, Bill Wallace. We've been in business now for 10 years, and we handle commercial financing.
Awesome. Thank you very much for being on my show.
Thank you for having me.
So, yes, I'm excited to talk to you about commercial lending. But first, as you know, we have our Just 2 Minutes questions. So, are you ready for action?
Sure.
All right. And go. All right. If scientists got together and said, hey, water is actually bad for us, what would you drink?
Mango juice.
Awesome. How come mango juice, not any other fruit?
It's real sweet. Or maybe watermelon. I suppose watermelon would be the second closest. I still got water in there, but...
I am with you on the watermelon. Do you believe in ESP?
Mind reading?
Don't stop it. You're reading my mind. Do you?
Maybe.
Okay. If it was true, how do you think it would work?
If it was true, I think you would have just heard me say yes.
Okay, I shouldn't have asked then. All right. So, if you were to pick any job at the whole post office organization, what job would you have?
Postman, delivering mail.
Where would you deliver mail to? Like what city? In Rhode Island?
In Rhode Island? Probably Newport.
Newport. Cool. Would you wear the shorts?
Absolutely.
Awesome. If you had to pick between two best friends to live in a home with, a crocodile or a tiger, which one would you choose?
Crocodile.
Oh, okay. And like what room would you dedicate to that?
To the crocodile bathroom.
Yeah. The bathroom? And if you need to use it, it's okay.
Okay, I have a very big bathtub.
Okay. All right. Awesome. And then last thing. Oh. All right. That was it. No, last thing. What'd you think?
That was great.
Cool. So, commercial lending. Let's talk about that. I know as a realtor, we get into the territory of like over 5 family. Now it's a commercial. Mm-hmm. Now I can't lend money to you. Let's start off with that kind of scenario. What do you have for someone who wants to live in the property, or is it not possible?
So if it was a 5 family and they wanted to live in the property, then like we do have programs for that. Like we would, as long as they qualified, we would place them into a bank loan. It's basically, it's pretty similar to an investment property loan. It's just a lower down payment because they would be living there. So they'd be able to take advantage of 20% down opposed to 25% down. That's really the biggest difference. They would still, we'd have to make sure that their personal income would be able to pay for their contribution to the total income of the property. Because generally, if somebody wasn't going to live in the property, I would say when looking for like an approval on a loan, their personal income is maybe like 20% of the total pie. Really, banks look at the property itself as like an independent entity. Mm-hmm. And the income generated by that property is what's going to support the mortgage. When you are one of the tenants in there yourself, or you're the owner, you're one of the occupants, the bank is going to want to make sure that you can afford your portion of the contribution.
Okay. Interesting. So in a regular residential loan, you get your loan through whatever company. And the next thing you know, you get a letter saying, oh, this is your new mortgage company. So Freddie Mac. Does that scenario happen with those types of loans?
It really depends on the bank. Some banks like to service their own loans. Some banks will sell the loan to a servicer, to another entity. I would say, I believe all of the banks that we work with service their own loans. I can't say for sure because there are a lot that we work with. Yeah. But I would say the majority of them service their own loans.
Mm. Yeah, it's tricky when they service their own loan because they have a pool of money and then now it's like, that's taken. And so I guess they have to, eventually if they need more money, they just sell it right? Is that how that works?
Yeah, or that's more of a question for the bank themselves. But I think usually when it comes to banks, like especially on the commercial side, a lot of times they do hold on to the commercial loans. The term of a commercial loan is also shorter. I mean, generally you're looking at 25 years opposed to 30. Some banks will do a 10-year term, but they always give an option to, or almost always give an option to renew, as long as you have a good relationship with the bank.
Does Freddie and Fannie think that those loans are too risky for them to take, or?
It's a question for a residential loan officer, so I don't deal with either of them.
Okay. Yeah, with commercial, there's so many different programs, right? There's so many different situations and scenarios. How do you keep up with all that?
Realistically, it's just every so often I'll speak with the lenders and see, do they have any updated programs? Do they have any new programs? When I first get in touch with a newer lender, one of my questions is, what are their oddball loans? What do they lend that's different? Some banks, especially because we're in Rhode Island and Massachusetts, or I'd say probably in New England in general, some banks will offer loans specifically for fishing boats. That might not be something that you think of off the top of your head, but we are coastal states, and that's something that can get taken advantage of. And it really comes down to, it's just like with each lender, they all have their own preference. Some lenders are more preferential to apartment buildings. Others may want like industrial properties. So that's one of the other reasons why we work with so many different lenders, is just so that we know that our client and the bank makes a good fit. We know what the client is looking for, we know what the bank is looking for, and that's why we try to bring the two together.
Okay. So my mind's like logical thinking. So now you're dealing with like 10, 15 different banks and 10 to 15 different scenarios, and you're meeting with a new client. How can you pick which program is going to work for them? Do you have like in a spreadsheet, or how do you?
No, really what it comes down to is, so we'll have a conversation with a client to start to figure out, what are they picturing? What's their plan? We get their ducks in a row. We kind of have a little strategy section, sit down and we figure out, all right, what's your goal? What are you trying to do? And what are your resources? So that's when we collect all their documents for pre-approval. And we see, all right, these are their strengths. What are their strengths? What are their weaknesses? And we just see what lines up, really. We take it one step at a time. And we try not to, we don't rush into anything. Put the feelers out, see who's interested and what the person is trying to do. And that's how we figure it out, really.
Okay.
It's just a lot of communication. That's really what it comes down to, is we just make sure everybody's on the same page. And, we try to make sure everybody gets what they want.
And you kind of remember like one of those 15 offers and you're like, oh yeah, this scenario would definitely work with that, right? With
Absolutely. When somebody first calls in, before I even get any documents or anything, I'll start thinking, all right, where will this person be a good fit? And then, it may be, all right, maybe the first one that I thought of is the right fit. Or maybe, we'll be going through the information and, all right, this isn't quite the fit for them, but I know that this person would love to get involved. So it's also just from experience too. You do it long enough, which shape will fit into which place, and you just fit it there. And yeah, it's a lot of practice.
So now you get this client and you've already already envisioned who would be a perfect fit for them. So, it's completely different from residential, like your situation, your life, and the way you do things. Do you create, like a realtor, an offer package that you send over to the lender?
Yeah, basically. So it's not like an offer, but it is a preliminary package. So I'll get, the pertinent information together, let them know, all right, here, this is the property. Because a lot of it also comes down to the property too, and making sure that the property is going to be profitable and be able to support its mortgage. So I get the information about the property, I get the information about the borrower, present it to the lender as a preliminary package. They say, all right, yeah, we're interested in this. And then we get all of the other information together and get sent over there. Goes through, like we always work with, at the senior vice president level, junior vice president, the vice president level of the lender. And they're the ones, if they're interested, goes into underwriting, and we make sure we get the underwriters everything that they need.
Awesome. Nice. So it is literally like, hey, here's this packet. Look how awesome this person is, and look how awesome this property is. Like, it's a pretty great deal for you, and
And if there is any issues, say a borrower had like a bankruptcy, or if they had, say they didn't have great credit, their credit's okay, they haven't had any lates in a while, we try to bring up any issues that could come up down the line. We try bringing it up from the very beginning so that everybody's on the same page from the beginning and there are no surprises. It's also why it's very important for clients to be clear and let us know if there's anything that we should be aware of, because if we're upfront about it with the lender, well, that's all well and fine, and we can get through it. If it comes up, if the lender finds out on their own, or it seems like, the borrower is trying to withhold information, then there's issues down the line.
Yeah. Yeah. And that's how you guys get your good reputation, because you're getting all this information in the beginning, so there's no surprises.
Exactly.
And mess up the whole loan. Now you have someone pissed off that they can't get what they thought they were going to get.
Exactly.
Awesome. That's really great. So once they get through that, once the bank picks them, and I mean, is this process similar with all the loans that you offer?
For the most part, I mean, if it's like a cookie cutter, pretty simple, I know when somebody will say, all right, this is a great deal, let's run with it. Even then, stuff will still come up. You never know, you're dealing with people. So everybody's different. But, no matter the program, I would say it's pretty similar. It's just, the more documentation, the more paperwork needed, there's more information needed from the client. If we're doing something with private money that can close in 2 weeks, a lot less is needed than if we were doing, say, an SBA loan, which takes, you're looking at 90 days, if not longer. And you're dealing with the federal government, so that they require substantially more information. But you're also getting better terms and a better rate than you would with private money. So it really depends on the program and the borrower. It's multifaceted. The timeline. Yeah.
Oh, man. Okay. All right. So once you've connected them, what's your next steps?
So I'm always the intermediary. We're working with both the lender and the client every step of the way. We're there from pre-approval to the closing table. So we coordinate with the lender. We will coordinate. So say, makes it through underwriting, borrower gets their commitment letter. So the bank says, all right, we've committed to lending you money. We need to make sure that the property appraises. If it was something where we were going off of projections, those projections need to be verified with the appraisal. And from there, say everything's going fine, well, then we work with the insurance agent. We work with the borrower's attorney. We work with the bank's attorney. Really, if anything is needed, I'm on the phone finding what needs to be done and making sure that it gets to where it needs to be. So it's not just working with the lender that we do. It's really helping the borrower every step of the way.
Awesome.
If somebody needs a referral, we give them a referral. We just try to make the transaction as smooth as possible.
Yeah, it sounds like a realtor, like holding their hand through the whole process to the closing table. That's pretty cool. So once they do get to the closing, I mean, that's the last step. Anything I missed in between?
No, I mean, realistically, if it was a construction loan, then, the borrower would have drawers after the fact. So they'd have to have inspections to get their drawers released. But yeah, other than that, and they just, they have to make sure they make their payments. And after a year, we're kind of distant memory, and they're happy to be in their property or have their business in a property or whatever their plan was.
Awesome. What's the craziest thing that you loaned to or helped loan to? What's the wildest?
We did an adult bookstore in the South once, because no one else. That's not something that a bank would really like to lend on. So we were able to get them a lender, and that was fine. But nothing like, even that. That's not that outlandish, it's the person.
So why is that tough to get?
Because it's banks don't like to lend on things that they would, so it was also a smoke shop.
Okay.
Now banks are around here because marijuana's legal. Some banks are more open to lending on anything that has to do with cannabis. It wasn't the case a few years ago. But I don't know, I guess it's anything that they don't see as just like a vanilla product, like a vanilla business. And it kind of comes down, I don't know, it comes down to, I don't want to say it comes down to the character of the business. But for instance, we can't do strip clubs. We always say we can lend to just about any business. Well, strip clubs, it's really anything in the vice industry. So we can't lend to strip clubs, can't do casinos. And if somebody, I don't remember, it's 40 or 51% of income is derived from gambling. Those are really the big ones. It's we can do bars, we could do breweries.
It sounds like, do you think religion plays a factor in those decisions?
I don't know if it's religion, but I think it might be something to do with public perception. They're a bank, you don't really think of progressive banks.
Yeah. These are the normal banks. These are the dirty banks. Would you use a dirty bank if it was oh, this is a dirty bank? Would you use it?
I mean, I don't know if I would go with the term dirty bank. Then it sounds like they're using stolen money or dirty money.
They're just lending to non, like, like frowned upon places like strip clubs or.
I mean, I wouldn't care about that. But I think we're in Rhode Island, and sometimes it hasn't always been banks that are lending money to strip clubs, I don't know.
All right, cool. Well, thanks for taking us down that road. Okay, so going back to the different products that you have, what's the fastest
product?
No, fastest closing that you've done? Like, I want this one of our
private money. I mean, probably a little less than 2 weeks.
Okay, the normal.
I mean, realistically, it just comes down to how long a title can get done. That's really the determiner. You have to have a clean title to buy property.
Even refinance, they have to pull title.
You never know what kind of lien.
Lender. Oh, okay.
What if you have $1 million mechanic lien on a property, or what if I don't know? There's a lot of different kinds of ways a lien could get put on there. Or just like a second position. So they have to make sure those aren't there. They need to know, what's actually going on with that property.
Because the trick is they buy the place and then they get a loan on it or second mortgage, and they're like, "Oh, hey, I want to refinance my small loan," and then
exactly.
But the title search pulls that up and is like, "Wait a second, you have other things that are hanging on this property."
Exactly, because sometimes people won't be very honest about the money that they owe on a property.
Yeah.
And that's like getting the title. That's how you know exactly what they have. So it really comes down to as quickly as the title can get done. Yeah, I think it was maybe like a week and a half. We might have, it's been a long time. I don't know about a week.
What about the longest?
The longest? Over a year. That kind of comes down to the scope of a project. I did an SBA loan out of state, and it was just a big loan. They had big plans, and that's kind of a barometer, is how large is the scope of this work. Because we have to make sure all of the bases are covered. In SBA specifically, that is, you're having the federal government involved. So they're going to go through that with a fine-tooth comb, and they could come up with questions that you or I would say, "Why are you asking this right now?" But you got to answer federal government, and when they ask you, got to give them an answer, because that would be something that they push the scale of yes or no.
So why? Is that one of the big reasons why SBA loans take so long to?
Because of working with it, yeah.
Yeah. Because there's so many layers and so many people that look at it and have to approve it and sign, and they might not be working on a Friday.
Yeah.
Now you have to wait.
And there's a lot of cooks in the kitchen. You're not just having one or two people sign off of it. You have many people sign off. Like, this was a multi-million-dollar project. It's not like it was a little one. But even smaller ones, it depends on what your plan is. It depends on the property. Are there environmental issues with the property? Because then once there's environmental issues, that can make it take a lot longer, because you need to have multiple tests done. What kind of remediation needs to get done? If it's construction, are the permits in place? Are the quotes correct? They have a lot of boxes to check off. And that's what makes it take longer, is just making sure that everything is correct, everything is approved. But I say a lot of times, even when when it does take a long time to get a loan done, when you're in the middle of it, it seems like it's, a lot longer. But once you get done with it and it's successful and it's in the rear view mirror, it's in the past, and now you reap the benefits.
Awesome. So that's the SBA loan. So let's talk about bank commercial lending.
Well, something with the SBA loan too.
Yeah.
And it's always worth mentioning is, one of the advantages, like, yes, an SBA loan does take a long time, and sometimes they can get done in 90 days. But with an SBA loan, it also gives I kind of look at an SBA loan the same way as like a first-time home buyer, an FHA loan, where they're getting a better deal.
Yeah.
So an established business could get into a property for 10% down. With bank financing, like we're about to talk about, they would be looking at 20% down. An SBA loan is a little bit more expensive to close because there's more attorneys involved, but they're getting a lower down payment. The rate is a little bit lower because the SBA rate is lower than the commercial bank rate. So you're kind of looking at it as like two loans almost. But it really is. It's like you're buying a home for your business. And a lot of times it's the first time that they're buying a brick and mortar location. Yeah. So it can be a very powerful tool for business owners, because it allows them to have a property for the business.
So you're saying SBA loan, lower down payment versus a commercial, which is almost double or even more. But the thing is like the closing costs for the SBA loan is more compared to the commercial. But wouldn't the closing costs also be, or might be, as close to the 20% that they're going to have to pay anyways?
Not really, especially not if they're looking at a larger property. So, if you're buying a property for $200,000, maybe you shouldn't get an SBA loan. It would be more advantageous to get a bank loan because, yes, your down payment would be a little higher, but you would be able to close quicker. There wouldn't be as many hoops that you need to jump through. More times than not, there isn't as much paperwork. But if you're looking at a larger property, that 10% difference in down payment is just going to get larger and larger and larger. So even those more expensive closing costs wouldn't be as big, comparatively. So the larger the number you're working with, those closing costs don't play as much of a role.
And that's why it's good having you, because you can look at their situation and be like, yeah, it's probably cheaper if you did the commercial, or it's cheaper if you did the SBA, depending on the situation. That's great. That's good to know. So yeah, let's talk about the commercial loan.
It's basically, if you were to look at a commercial loan, bank financing, generally speaking, you're looking at a 25-year term, 25-year amortization, 2 months to close, 60 days. And the majority of the approval is based off of the debt service of the property. So it's looking at the income of the property versus the expenses and mortgage payment. And we would just want to make sure that the property is able to make those, pay all those expenses and then have money, to go in your pocket, to go in the bank as reserves.
How's the rate on those types?
So as of earlier this week, I believe it was right around 6.8. Could even have been 6.7 or 6.68, somewhere right around there. It's pretty close. The rates have been coming down lately.
Okay. Like SBA loan is...
SBA, so I haven't checked the SBA rate, but if the bank rate was 6.8, my guess would be it's at least 6.2, if not 6%.
Oh, just a little tiny bit lower.
Yeah.
Okay.
Generally, in the past, it's been like a 1% difference. So whereas if the bank rate was 6, the SBA could be 5. Yeah, the SBA rate is always a little bit cheaper. But with an SBA loan, you do have both. So if you're buying a property for $100,000, just for ease of numbers, and you're getting an SBA loan and you were putting 10% down, you'd have a loan, the bank portion would be $50,000. SBA's portion would be $40,000. So you'd have, if the rate was 6%, the bank rate, 6%, you'd have 6% on the 50 and 5% on the 40.
Wow, okay. I guess that also depends, right? So that's the commercial loan. And anything between that and the hard money? Any solutions?
So there is, we work with lenders, like light dock lenders, where the rate is higher, but you don't need to supply tax returns.
Who are these people?
Just a lot of different lenders. They're not quite, I wouldn't call them, a private
Not dirty
lender.
bank.
Yeah, no. But it's basically corporations that lend money. So where you
legit,
would see,
like, let's say, I'm not saying CVS, but CVS, like...
No. So
okay,
it's still a, private.
So their job is to...
Is lend money.
They're
lenders.
money. Okay.
So essentially, you're looking at like DSCR lenders.
What's the stand for? Debt
Service Coverage Ratio.
Okay.
Which is a hot topic now with a lot of people.
How come?
Because a lot more residential loan officers can say you wanted to buy a 4-unit property, but you don't show much income on your taxes. Then they have the DSCR lenders where they don't look at your tax returns. We never use them as a first pick because the rate is higher and there are better programs out there. If the taxes aren't that bad, then we'll try to place them with a bank. If they are really just not paying taxes, then you got to pay somebody and you're going to pay it with a higher rate. So that's the way that we look at it. But that's I would say that's a middle ground between private lending, because you can still get, I haven't checked the rates on that this week, but I would say decent credit, you're probably looking at a rate in the 9s opposed to 12% with a private lender.
Wow.
Some private lenders charge even more than that.
So if they're not looking at income, what do they...
They look at the income of the property opposed to personal income.
Okay. And that should be what percent of the income, the payment, versus how they look and see the income of this place versus your monthly payments are going to be like, is there...
So they'd want to look at the debt service ratio. This isn't the minimum, but say it was 1.5. So 1.5 would be the income of the property, and they would be looking at an adjusted income. So they take some expenses off. Standard in the industry, everybody takes 5% off of the income for vacancy, even if it's a single unit.
Yeah.
But they're going to look at to make sure, so say if it was a debt service of 1.5, which would be a strong debt service, that means that the income of the property, the adjusted income of the property, is 1.5 times the expenses.
Okay. So let's say it's $1,500 a month, just to make it easy for the audience. So if it's $1,500 a month that it's bringing in, this property, you're saying
If its adjusted income was 1,500,
adjusted after you remove the vacancy.
and there's a couple others that they take off. But if the adjusted income was 1,500 and all of the expenses, mortgage payments, everything was $1,000, that would be a debt ratio of 1.5.
1.5. So $1,500 income, but the loan is going to be $1,000. That situation will work.
So the principal, interest, taxes, insurance, utilities, all of the expenses. That's how they look at everything, correct.
Okay, cool. That's an easy way for people to think about it. That's good. But the rate is high, so
exactly because they don't want to show that their income on their taxes. So you gotta, everybody's got to pay somebody, and
so the 1,000 here, could be like 700 somewhere else.
Yeah,
someone. Payment of 1,000 could be 700 another place. Okay, cool. Wow, awesome. DSLR camera. Is that what it's?
DSCR.
DSCR. Okay, cool. Not the camera, the other one. All right, and then anything else between?
In between those, no. I mean, then you got private money.
Private money, yeah. Let's talk about that.
So private money, hard money, same thing. Short-term loan secured by the real estate. Want to make sure you have an exit strategy. Yeah. That's really what it comes down to. Is with short-term financing, you have to have a plan on how to get out of it.
So if I had 500,000, right? I go to you and I say, "Hey, could you add me to your list?" Is that what happens?
Generally not. I mean, we have potentially, we would entertain it, but it's that, we meet lenders or we have pools of hard money lenders where it's just like with the bank or any other lender. We put together a package. We say, hey, these are the strengths. If there's any weaknesses, these are the weaknesses. This is what the client is trying to do, and this is what our plan is to get them out of the loan, the exit strategy. Whether that is, if it was a flip, they're going to sell the property afterwards. If they wanted to hold it, we'd figure out what's the best way to refinance them. So then they'd be able to refinance the hard money loan.
So they all, you have to make sure, each one has their own rules or set of rules, how they want.
Yeah, because, there are some may have no prepayment period. Others may have a prepayment period.
Yeah.
Some have, higher points no matter what. Like a hard money lender is going to want points up front. Those are really the big ones with the private money. Private money lenders, a lot will still want to see an environmental report, make sure that there are no environmental issues, because once a borrower buys the property, any environmental issues then becomes their environmental issues.
So for the audience, if someone's buying a property, the bank is lending them money, this property could have a leak of some kind that's toxic, where DEM comes in and says, oh my gosh, there's toxic stuff being leaked. And they're like, it's not my fault. Well, it's your fault now.
Because you own the property.
Yeah. And then they're like, all right, you owe $1 million to get all this stuff cleaned. And now the lender's like, oh my God. So that's why
environmentals are done there to prevent. Or say somebody bought a property cash. They were like, all right, I got the money, I'm just going to buy it. I don't want to have to waste my time getting environmental done. If they go to sell that property and somebody has an environmental done, part of their due diligence, and something is found, then that's their responsibility. And in an environmental company, they need to report what they find to the DEM so they know what's going on. And that's why it's important when somebody buys a property, that could potentially have environmental issues, to get it done. Phase 1 environmental is maybe somewhere in a ballpark of $2,800. But in the grand scheme of things, it's not much compared to. So a phase 1, you're looking at around $2,800. Could be a little lower, could be a little higher. A phase 2 environmental, then you're starting to get into 5-digit numbers. It could be $10,000. Maybe it's $8,500.
Where they dig deeper.
Where they try to see exactly, what could be here. And then if they find things and there needs to be remediations, that could be, say $20,000. We've seen it be $100,000. Makes a deal fall apart. But those are all that $100,000 for remediation. If you own that property, that is your responsibility.
Okay, so let's say I want to buy a property, okay, and the seller's like, oh yeah, great, you can buy it. All right, yeah, let me get the lender. Oh, I need a phase 1 environmental. Okay, I do that. They find an issue, the person doing the phase 1, they're required to report this immediately to DEM.
I don't know if it's immediately.
Well, okay. But they are
supposed to. Yeah, they are. That eventually, what gets found gets reported to DEM.
And I pull out of the deal, and this old owner is screwed, right?
Yeah, they got to fix it. Or they got to find out what, maybe a phase 2 is done.
They have to go bankrupt. They can't, wow. That's interesting. Okay, so back to the hard money lenders, because you said something interesting. You said the pool of hard money lenders. I'm envisioning all these big sweaty guys with like hairy in one pool together, swimming pool. But that's not what's happening. It's these hard money lenders that have, let's say, 500,000 each, and someone's like, I need to borrow 10 million. These guys get together and put their money together? Is that what you're
There are
saying?
some lenders will put their money together.
Okay. Through you guys,
Realistically-
like, could you guys put people like that together?
Possibly. Have we had to yet? I don't think so. Maybe.
What if someone isn't that rich? They don't have 500,000. What if someone has like 5,000 or 10,000? But there's like 100 of these 5,000, 10,000 people.
I mean, that's not something that we would touch.
That's a lot of people to manage.
Yeah, I mean, that's something for an attorney, realistically, or somebody, because, then you have to figure the corporate structure.
Yeah,
Those things they're all, that would be 100 people all in one corporation.
Yeah.
They'd have 1% interest in that corporation.
Yeah.
Because that's really what it comes down to with the private money, with things like that, or anything, you hear about people having investment syndicates where multiple people partner up to invest in property. Maybe that would be something. If somebody needed to raise all that money, they take on some partners. But I mean, that's it comes down to, it's somebody's personal corporation that's lending the money. Sometimes people will lend it in their own name.
Yeah.
It's a corporation lending it, an LLC. Yeah, sometimes a couple lenders will combine forces to lend money. Some private money lenders are just larger and, they have the ability to lend it. But also, if you were looking at, $10 million, I don't think you'd want to have a $10 million hard money loan. Because that's, if you look at...
Because banks, dirty banks, they'd be down to lend to you, but...
Well, no, if it was a regular bank will lend $10 million, it just depends on what you're trying to do. Something else you got to think of with private money is when you approach it, you got to ask yourself, would you lend this person that money? That's, one of the first questions. Is this a deal that's going to work or not?
Okay.
Would you lend a person the money? Why do they need private lenders to lend them $10 million opposed to why can't they go to a bank? What is it? Do they not have enough money to have, skin in the game? If that's the case, a private money lender is not going to lend it to them. It's all of their money that's going to be on the line. This guy's not going to have any money on the line.
Yeah.
So that's something to think about too, regardless of whether it's private money, if it's bank financing.
Yeah, you got to get a good feeling about what you're doing. If something seems suspicious, and I'm sure you've had suspicious stuff that you tiptoed away from or said, we can't do this.
Yeah, there's definitely been times where we've said, we can't do something like this.
I know you can't say it on camera.
Well, no,
nothing
ridiculous. But yeah, you got to pick and choose. Sometimes, one thing to think about too is, a lot of times if somebody has a felony, a bank won't lend to them. Even, sometimes if you look at that, though, that's like a whole other conversation.
Yeah.
Because it's, if somebody has a felony from 20 years ago, that shouldn't make it so that a bank won't lend them money. There's supposed to be reform.
Yeah.
But especially, if it's a felony for something that was so far in the past or something that was nonviolent, somebody shouldn't be continuing to have to pay that debt so far afterwards.
That's awesome. Yeah, we covered a lot of things that I wanted to talk about. How do people find you guys?
They can find us online at cornerstonecommercialcapital.com. We are on Facebook under Cornerstone Commercial Capital. Or I would also have maybe at the bottom of the screen our phone number. Or just in the comments, something.
We don't have the technology to do that yet.
But our phone number, if somebody wants to call in, is 401-603-3732. That is an office number, so it will not get texts.
Okay.
But there's always somebody in to answer questions, and most likely they would either be speaking to myself or to my father, Bill.
Who's an awesome guy. Bill is really cool. Yeah. And I heard that you're going to be out there more. You're going to be the face.
Yep. Be out there out and about when I am not behind my desk.
That's exciting.
So I'm always there. I don't, people ask me all the time, can we get lunch? Can I meet you for lunch? And it's nope. I eat lunch at my desk while I'm working on paperwork or answering questions on the phone.
Yeah. That's awesome. Yeah, definitely good as a realtor. Having you guys as partners is super important because you make us look good. Like someone wants to buy something that's, they're like, I can't put the money together to get this. And it's like, well, yeah, I get you, connection. That's what I've done for you, like send stuff over. But yeah, definitely good real estate partner. And thanks very much for coming down and being interviewed.
Thank you for having me.